Welcome to the Radio Revenue Podcast. Today, we're embarking on a really fascinating deep dive into the intricate world of a true global logistics giant. And this isn't just about, packages moving from point A to point B. It's about understanding this incredibly complex, interconnected system that touches nearly every corner of the world. It profoundly influences global supply chains, international trade, and even how you get your everyday goods. Our mission for you today is really to provide a shortcut, a way to get quickly well informed about a company that's constantly adapting to global trends, global challenges. You'll gain some, I think, surprising insights and connect the dots on how these massive enterprises navigate this ever-changing landscape. We're going to distill the key nuggets of knowledge from the recent reports, helping you quickly grasp what's really crucial here.
And it's fascinating. We're looking at an organization headquartered in Memphis, Tennessee, but its reach connects over 99% of the world's gross domestic product. Just think about that for a second. Nearly every bit of economic activity somewhere could potentially be touched by this company's network. That scale alone, well, it presents a huge competitive moat.
It really is remarkable, isn't it, how a network like that gets built over decades. It just highlights the immense investment, the constant innovation, and the specialized expertise needed. But beyond just the physical assets, what really sustains that edge? What makes it so incredibly difficult, for anyone else to replicate?
You've hit on a really critical point there. What truly fortifies their position and makes it almost impossible to copy isn't just the physical stuff like their, nearly 700 aircraft, the world's largest all-cargo air fleet. It's also the decades of specialized operational know-how and those deeply embedded customer relationships. As of May 31st, 2025, their operations involve something like 440,000 employees, over 175,000 motorized vehicles, and a staggering 63,000 drop-off locations worldwide. It's this immense, finely tuned physical machine all working together.
And this machine, it's not just playing the same old tune, is it? It's constantly evolving. Tell us about the recent organizational shifts, the ones reshaping this giant.
Indeed. Yeah, a really significant change just happened. June 1st, 2024. They consolidated FedEx Ground and FedEx Services directly into Federal Express. It's a strategic move, basically creating a unified air-ground express network. The aim is greater efficiency, more seamless operations for their core package delivery. Now, FedEx Freight, that handles their less-than-truckload or LTL services. That remains a separate subsidiary. Oh, and interestingly, FedEx Custom Critical, the time-sensitive, high-value shipment folks, that's now been integrated into FedEx Freight.
Okay, so for listeners trying to follow the financials, what does this mean? How do they categorize their business segments now?
Good question. Yeah, for reporting, you now essentially have two main segments. There's Federal Express, which covers express, small package ground, and their freight transportation. And then there's FedEx Freight, handling that specific LTL freight. It simplifies the structure, definitely offers clearer visibility into the core operations, but keeps that specialized focus where needed.
Right. And beyond those main delivery services, they also have these other key operating segments, the ones reported under corporate, other, and eliminations. These aren't just sidelines, are they? They seem like crucial support systems making the whole ecosystem work. Can you give us a quick rundown?
Certainly, yeah. These include FedEx DataWorks. It's all about digital transformation, creating innovative solutions for customers and their own team members. Then you've got FedEx Office, providing document and business services, plus that retail access point to their shipping network. And finally, FedEx Logistics. That covers customs brokerage, global ocean and air freight forwarding, and integrated supply chain management through FedEx Supply Chain. So it really shows their comprehensive approach, doesn't it? Not just moving goods, but handling the critical info, the docs, the whole supply chain management piece that's vital today.
That brings us neatly to their strategic shifts and their big digital transformation efforts. Now, underpinning all these changes seems to be this crucial initiative, the D-Drive program. Tell us more about what that actually entails.
Right, the DRIVE program, it's absolutely core. It's aimed at improving long-term profitability by, driving efficiency, lowering overhead, and transforming their digital side. And they're getting quite specific. It includes things like consolidating sortation facilities, reducing pickup and delivery routes, basically making things tighter, and optimizing their core transport routes and hubs through something called Network 2.0. This is essentially smart planning, trying to get more mileage out of every mile, across their huge ground operations. As of May 34, 2025, they'd rolled out Network 2.0 optimization in about 290 locations in the US and Canada. They're taking it market by market. And parallel to this, there's also Tricolor. That's a separate effort specifically to redesign their Federal Express international air network for better efficiency and asset use, making the global fleet work smarter.
Wow, it sounds like they're really reevaluating every single part of their physical network. And another major strategic move, the planned full separation of FedEx Freight, making it a new publicly traded company by what, June 2026? What's the thinking behind sort of unbundling that segment?
Yeah, that's a big one. The move is aimed at unlocking greater value for shareholders. The idea is to let each company pursue its own strategy with a much sharper focus. They've already picked John A. Smith as its future president and CEO. So this spin-off, it's a clear signal, really, about maximizing efficiency and shareholder returns.
And thinking about their long-term vision, it always seems rooted in technology. The late founder, Frederick W. Smith, famously said, "The information about a package is as important as the delivery of the package itself." That feels incredibly relevant today, doesn't it? How has that philosophy kept shaping their approach, especially now? Oh, absolutely. It totally guides their huge IT investments. They're undergoing a major shift right now, moving from traditional mainframe computing to cloud-based systems. And this shift, it's designed for big benefits. Flexibility, security, speed to market, overall resilience. For you, the customer, this translates into concrete tools you might even use already, like the FedEx Ship Manager Suite for handling parcel and LTL shipping. Then there's FedEx Delivery Manager that lets U.S. residential customers customize home deliveries, schedule dates, locations, times.
That kind of customization, that definitely hits a key customer need now, especially with e-commerce just booming. What other tech solutions are they rolling out for businesses and consumers? Well, for businesses, particularly with e-commerce, FedEx Returns technology is a pretty comprehensive solution for high-volume merchants. It gives them visibility into returns, tracking, inventory management, even analysis of shopper return habits. They've also launched FedEx Easy Returns, a cost-effective way to bundle multiple customer returns into one shipment, plus FedEx Extra Hours. This extends evening order cutoff times for retailers, allowing next-day local delivery or two-day shipping across the continental U.S., sometimes as late as midnight.
That's a serious edge for retailers competing on delivery speed.
Exactly. And for freight customers, there's LTL Select. It's a free cloud-based system, a multi-carrier transportation management system. It gives customers visibility into all available carriers, their pricing, all in one spot, plus booking and payment ability. And looking even further ahead, they're exploring autonomous delivery tech. They've got a pilot program with Aurora Innovation and PACCAR for line haul operations. So yeah, it's clear tech isn't just support, it's absolutely core to their future strategy and competitive advantage.
Okay, let's shift gears now and look at the financial landscape. This often tells a really critical part of the story. What do their fiscal year 2025 figures, the ones ending May 31st, 2025, what do they reveal about performance?
Right, the numbers. Fiscal 2025 revenue saw a slight uptick, came in at $87.9 billion. However, operating income, that declined by 6% to $5.2 billion, and net income also fell 6% to $4.1 billion. Diluted earnings per share was $16.81. Now, the income decline, it was influenced by several things. They saw lower shipments and fuel surcharges at FedEx Freight, and there's this continued shift we're seeing from customers towards slower, less costly, deferred package services. Basically, people choosing cheaper, less urgent shipping, which impacts revenue per package. Also, the expiration of their contract with the U.S. Postal Service back in September 2024 played a role. And, increased costs, purchase transportation, wage rates, and even having two fewer operating days in the fiscal year.
That's quite a cocktail of headwinds there. Were there any positive offsets? Anything pushing back against those pressures?
Yes. Importantly, these pressures were partly offset by savings from their drive initiatives, which we talked about, and also higher demand for international economy services and U.S. ground package services. So, yeah, challenges remain, but those internal efficiency programs, they are starting to show some results.
Okay. And despite those pressures, they're still making pricing adjustments. How are they approaching their pricing strategy these days?
Well, on January 6, 2025, they put through a 5.9% average list price increase for U.S. domestic and international services for Federal Express. Similar bumps for FedEx Freight, too. They also actively manage demand surcharges, adding them, adjusting them based on shipment volume and network capacity. For example, after the 2024 holidays, U.S. domestic demand surcharges were suspended, but then they were brought back for some international lanes in August 2024, though some ended May 31st, 2025. Interestingly, a new demand surcharge for U.S. to Canada ground started just in June 2025, so they're constantly tweaking those.
And how do fuel costs fit into the bottom line, especially since you mentioned they're not hedging?
Yeah, they use an index fuel surcharge that adjusts weekly, basically tracking market prices. In 2025, jet fuel costs for Federal Express alone were $2.8 billion. That's about 3.2% of their total consolidated revenue. And the key point, as you said, is they don't currently have jet fuel hedging contracts, which means they're directly exposed to fuel price swings. That's a significant variable in their operating costs for sure.
Turning to shareholder value, then, how have they been active in that area?
Oh, quite active with share buybacks. In fiscal 2025, they repurchased $3.0 billion worth of their stock. That was 10.9 million shares. And that benefited diluted earnings per share by about $0.44. And they're keeping it up. As of July 21, 2025, they'd already completed $500 million in buybacks for fiscal 2026, with another $1.6 billion still authorized in the program. So it signals confidence in their own value and a commitment to returning capital. Plus, they declared a $1.45 per share quarterly cash dividend on June 9, 2025.
So if we connect this to the bigger market picture, what does their 5-year cumulative total return tell us, say, from May 31st, 2020 to May 31st, 2025?
All right, looking at that 5-year window, if you started with $100 invested, by May 31st, 2025, FedEx Corporation stock would be worth $182.43. For comparison, the S&P 500 hit $209.42, and the Dow Jones Transportation Average was at $176.03. It's quite telling, actually. FedEx outperformed its specific transportation peer group during that period, but it did lag behind the broader market, the S&P 500.
Huh. That's a really fascinating insight. It sort of suggests that while they're navigating their own industry pretty well, maybe broader economic currents or perhaps specific sector challenges created more volatility in their returns compared to the market as a whole, even with all these strategic changes.
Precisely, and that raises the important question, what are the critical areas the company is watching closely looking ahead? Well, one major vulnerability is always global economic conditions. Geopolitical developments, shifts in trade policies, those are huge. For instance, ongoing conflicts, while maybe not having a direct material impact yet, could have wider consequences like sanctions or airspace bans that disrupt their global network.
And beyond those macro factors, there are operational risks too, right? Like actually executing that massive G-Drive transformation program successfully on time and on budget. Plus, the ever-increasing threat of data breaches, cybersecurity incidents. That's a constant worry now. And you mentioned rising costs of self-insurance, including these large nuclear verdicts in the trucking industry.
Yes, exactly. These are massive, often multi-million-dollar legal judgments from severe accidents. They significantly increase insurance liabilities and costs.
Yeah.
It's a big concern for the whole industry. And then there are the human resource challenges. Those remain critical. Things like labor relations, especially with their pilots and other unionized groups outside the U.S., plus the broader challenge of just attracting and retaining talent in a really competitive market, and managing the significant costs and, frankly, volatility associated with employee benefits like pensions and healthcare. It's a complex web for a company this size.
Okay, pivoting to something more positive, let's talk about their pretty ambitious commitments to sustainability. What are their main environmental goals?
Yeah, they've set a big one. Achieving carbon neutrality by calendar 2040. And that's for their global Scope 1 and Scope 2 greenhouse gas emissions, and even their Scope 3 contracted transportation emissions. That's a huge undertaking given their business model. Their strategy is sort of three-pronged. First, decarbonize what's possible using existing tech like more fuel-efficient planes, electric vehicles. Second, co-create with purpose, working with others to innovate future solutions like low-emission heavy-duty trucks. And third, neutralize what's left using durable carbon credits and supporting initiatives like the Yale Center for Natural Carbon Capture.
It's good to see them setting goals and outlining progress, though I imagine it's not without its challenges.
Exactly right. They hit a 40% improvement in vehicle fuel efficiency by 2024 compared to a 2005 baseline, which is good. But their more ambitious 2025 goal of a 50% increase, they say that's unlikely to be met. So, reality check there. They also procured over 3 million gallons of blended sustainable aviation fuel, SAF, in 2025 for U.S. operations. They're aiming for 30% of their jet fuel to come from alternative sources by 2030, but they openly acknowledge the global need to really scale up as supply. It's just not widely available enough yet.
And beyond the environment, what about their people-first culture and broader corporate responsibility?
Well, their people service profit philosophy, that really underpins their approach here. It involves prioritizing safety above all and living up to their purple promise, making every FedEx experience outstanding. They emphasize equality, opportunity, diversity, and they've gotten recognition for it. Forbes is America's Best Employers 2025, Ethisphere's World's Most Ethical Companies. And through FedEx Cares, their community efforts focus on 4 areas: delivering for good in disasters, empowering entrepreneurs, advancing climate solutions through research, and engaging people in communities locally. It's meant to be a holistic view of their impact.
So what does this all mean for you, listening in? We've really unpacked a dynamic picture here, haven't we? A global logistics leader defined by constant innovation, ambitious strategic shifts like Drive and the spin-offs, but also facing inherent risks, fuel volatility, legal challenges, the works. Understanding these different facets hopefully gives you a deeper appreciation of the complexities of modern business and how a company like this tries to adapt and, well, thrive.
And looking ahead, maybe here's a thought for you to ponder on. Given this company's vast global physical network, plus their significant investment in digital transformation, and their strong focus on people and sustainability, how might their integrated approach to data and logistics fundamentally reshape not just their own industry, but maybe global supply chains and even consumer expectations in the coming decade? Something to think about.
It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.